Hello everyone, welcome to our session. So today we are going to discuss about the technical analysis. So we'll check the topic from our unit. So the technical analysis we are going to discuss about the concept and theories mainly related to Dow theory and Elliott wave theory, then different types of charts and trend reversals, then market indicators, and then market efficiency and behavioral finance. So we'll see one by one. So today in this video, we are going to discuss about the technical analysis. So what is a technical analysis? Technical analysis is the process of predicting the price movement of tradable instruments using historical trading charts and market data. So technical analysis, we usually take the historical data of the market of any companies, and then we are going to analyze and we can forecast the future price. So that's called the process of predicting the price movements. Right? So as a result, investors can spot potential short and long-term investment opportunities. So once you analyze through the technical analysis, so the investor, they can take the decision whether they can go for short-term investment or long-term investments. So commonly used in behavioral finance and quantitative research, it helps analysts examine trends in securities trading. So the main purpose as a investors, we people are going to take the decision whether we are going to invest in short term or long term, and which will give you high profit in futures. Right? So always the investments will have a risk and return. So when you are taking the decisions which will have high risk or low risk, so it's obviously the decision based upon the investors. So investors should know about the technical analysis as well as the fundamental analysis. Now, who are all the parties are involved? One is traders and investors, and then analysts. So these are the people who are involved in the technical analysis, and they required the concept of the technical analysis to identify and to make the decisions. So traders also require technical analysis to suggest which is shares their customers can invest, and when they can go for short-term investment and when they can go for long-term investments. And investors also, they required when as an investor, if I'm going for my own decisions, I'm investing through my side without getting any help from any other technical analyst. So I can use these methods. At the same time, for analysts also for suggesting the stocks to the customers. So all these three people will use the historical prices, trading volume, chart, pattern, and market data. So all these informations will be available in NSE as well as BSE, and all the companies also they are updating. Right. So if you search in the Google or NSE BSE, the charts are available. So we can take the historical data and the past performance of all the companies, the share price, whether it was increased or decreased, and what is the trading volume, and different type of charts we can able to identify. And by analyzing all these things, we can use the technical analysis. So which will help us for forecast the price movement of tradable instruments. So whatever the instruments we are going to trade in the market, we can identify and forecast the price movements, and then identify spot potential for short-term and long-term investment opportunities. So this is the process, and easily we can understand what is technical analysis. Now we'll see the meaning and definitions. So technical analysis can be defined as an art and science of forecasting future prices based on an examination of the past price movements. So technical analysis is not astrology for predicting prices, and technical analysis based on analyzing current demand, supply of commodities, stock, indices, futures, or any tradable instruments. So technical analysis involves putting stock information like price, volume, and open interest on a chart and applying various patterns and indicators to it in order to assess the future price of movements. So the time frame in which technical analysis is applied may range from intraday, 1 minute, 5 minutes, 10 minutes, 15 minutes, 30 minutes, or hourly, daily, weekly, or monthly price data to many years. So intraday too, we can go for short-term and long-term process. So at any point of time, always we require to know the future price. So how we are going to predict the future price through the technical analysis, right? So this is how the technical analysis, the concept and historical data will help the investors to forecast for the future price. Now, the basic assumptions we have: the market discounts everything and price movements in trends. History tends to repeat itself. So, what is market discounts everything? So, technical analysis is criticized for considering only prices and ignoring the fundamental analysis of the company. So, usually, the initial stage we will go for analyzing the fundamental analysis about the company history, performance, and their strength, weakness, everything. But when it goes to technical analysis, we ignore the fundamental analysis, everything. Mainly, we are focusing for the price and volume, right? So technical assumes that at any given time, a stock price reflects everything that has or could affect the company, including fundamental factors. The market is driven by mass psychology and pulses with the flow of human emotions. So emotion may respond rapidly to extreme events, but normally change gradually over time. And it is believed that the company's fundamentals, along with broader economic factors and market psychology, are all priced into the stock, removing the need to actually considering these factors separately. So this only leaves the analysis of price movement, which technically views as a product of the supply and demand for a particular stock in the market. Now, second assumption, price moves in trends. So trade with the trends is the basic logic behind technical analysis. So we have to trade with the trend. The trend lines always it will go upward or downwards. When it goes upward, we can follow the same trend lines for doing the technical analysis, also for investments. Once the trend has been established, the future price movement is more likely to be in the same direction as the trend then to be against it. So when the trend lines start to come down or reduce, it shows the negative value, then they have to sell or they can wait for again when the trend line next time it will get increased or going for the uptrends. So technical analyst frame strategy based on this assumption only. And history tends to repeat itself. So people have been using charts and patterns for several decades to demonstrate patterns in price movements that often repeat themselves. So the repetitive nature of price movement is attributed to market psychology. In other words, market participants tend to provide a consistent reaction to similar market stimuli over time. So technical analysis use a chart pattern to analyze market movements and understand trends. So already we have discussed the meaning itself. So history tends to repeat itself. When we are going to take the historical data, so sometimes the same concept will repeat again, right? So the pattern will be followed. The trend will be going upward trends. So we have to analyze the technical uh, pattern so that it will be useful for us to identify the future price and also the pattern how it will the price movement out. So weekly basis or monthly basis or yearly basis. So hope you understand the basic concepts of the technical analysis and the meaning, and the other topics we will discuss in the next video. Thank you.